The Reserve Bank has hiked the repo rate by 50 basis points. The central bank is trying to bring under control stubbornly high inflation. It has revised higher average inflation for this year to 6.2% from an earlier 6%. Inflation is expected to slow to within the Reserve Bank's target bracket of 3 to 6% next year and only reach the midpoint of the target range by 2025. Fuel, electricity and food prices were blamed for the higher inflation. The Reserve Bank says load shedding may also add to the rising prices as it affects the cost of doing business and the cost of living, especially as diesel consumption increases.
The MPC decided to increase the repurchase rate by 50 basis points to 8.25% per year with effect from the 26th of May 2023. The decision was unanimous. At the current repurchase rate level, policy is restrictive, consistent with elevated inflation and risks.
This is the 10th consecutive rate hike, meaning in the past 2 years, cumulative rate hikes amount to 475 basis points. While the higher interest rate environment may be good news for those with interest-earning savings, indebted consumers are in for an even steeper uphill journey, having to contend with the rising cost of living. If you bought a house for R1 million at prime lending rate with a 20-year repayment period before the Reserve Bank started hiking rates, you would have been paying just over 7,700 rand on your home loan installment. With this increase, including the increases since November of 2021, you're looking at paying 10,837, which is just over 3,000 rand more than you were paying then. This has spelled bad news for indebted consumers.
You have debts, you must pay your home loan, you must pay your vehicle finance. So when interest rates increases, remember your salary don't just adjust because interest rate increases. So it becomes very difficult for consumers because now consumers are increasingly facing difficult decisions. A decision whether you pay your mortgage or you buy food. So that is why we've been seeing more and more some consumers are even skipping paying their loan, whether it's a personal loan or a vehicle finance, because of these pressures. They are facing, and also increasing in interest rates. This is the positive side now, because there's a negative side, but there's also a positive side, because when you raise interest rates, you disincentivize people from consuming now. So you encourage people to save, because if you save in this environment when interest rate is higher, so you get better returns.
The Reserve Bank has revised slightly upward expected growth for the local economy to 0.3% for this year, barely significant to make a dent to address the many socio-economic challenges the country faces. This as the electricity crisis and logistics constraints continue to impact economic activity negatively while increasing costs. Gloria Sefakomosi, SABC News, Johannesburg.